Right. Morning, everyone. Let's start it off. We're going to have a bit of a slow start to Monday, potentially. We do have a move going on right now, S&P futures, but London's closed. Could be a little bit more of a quiet day than we have seen over the last week and a half. We saw a nice finish in the States on Friday's session. Nasdaq, S&P, you can see there once again, making a real rally into the close. I think it's important. We managed to kind of finish up there on the highs. Market shook off a lot of worry into the end of the week. I know that I think the S&P and a couple of the markets actually finished higher on the week, which I think is a real win. What the real attention was on over the weekend was on Jackson Hole. We had a couple pieces of commentary that came out of there over the weekend. That's what's driving the equity markets and the index futures markets this morning, putting some pressure on the S&P and that sort of thing, with Fed Vice Chair Stanley Fischer indicating the September rate hike has not been dismissed. Also one of the other members talking about the fact that it is still very much on the table because the data set has improved. We've got non-farm payrolls coming on Friday, which is probably could end up being a bit of the nail in the coffin for Saturday if we do get a really good number. If we get a really bad number, then also likewise, I think it could pull them away from September. But either way, I mean, they're still coming soon, and I think that's what's key. As long as there's not total panic going on in China, then the market should be able to handle it. We also saw a continued rally in crude. I'll show you that chart in just a little bit, but a huge rally off the bottom, and that's helping us as well. I mean, that was the other major part of the worry was, like we've talked about over the past few days, these high-yield bonds in the States being so attached in the energy sector to the oil price that putting any more further downward pressure on them would most likely assure their failure. So the fact that we a little bit of a bounce here is definitely some relief to the market. Falling on into Asia, you can see here definitely under a little bit of pressure this morning. Most markets down 1+%. Australia, Nikkei, Shanghai, kind of all moving in tandem. We've got policy, central bank policy in Australia tomorrow, so that could be interesting. PMI numbers out of China continue to be shocking, but that's nothing new. Right, moving on to a chart of interest. Okay, so this is showing that equity funds have seen the biggest daily outflows over the last 2 weeks since 2007. If I'm not mistaken, you can see back here in 2007, and we know what 2007 preceded. Obviously, people got really worried. Markets still hung around and hung on for quite a while, and then we imploded in style. So this is somewhat worrying. At the same time, you can look at this as very much as a contrarian. I mean, look at the big amount of outflows that we saw here in early 2014 or late 2013. Same with seeing late in 2014, we saw some big outflows, and those proved to be major buying opportunities. So I'm not so sure that you can look at this as straightforward as just comparing it to 2007. Okay, a bunch of stocks going ex-div this morning. Just a couple of the majors, maybe REIs, AFE, CCOs, and SGLs and MPTs. Only ones really probably needing to pay attention to there. Right, in terms of market data, we had the Japanese industrial production, which is a bit of a miss this morning. We had local money supply, which is better. We had CPI out of the Eurozone at 11. We've got trade balance here locally at 2 o'clock. Then we've got the Chicago Purchasing Managers Index and the Dallas Fed manufacturing activity in the States. All right, let's get into some apps. Nothing particularly exciting that I've found to show you guys today. Why does that look so funny? Sorry about that. Just give me 1 second. Sorry, just let me redo that. So first thing we'll look at this morning is light sweet crude again. We showed it on Thursday or on Friday as well. You can also see this on Friday's session. We've really had another major rip higher, really putting us firmly above what I think was some sort of short-term resistance. So we're making a major breakout off of these lows here. I'd like to see us come back and test the 200-day, which is quite a long ways away from here. So that happens, then I really think you could look at some upside in some of these stocks, especially some of the really beaten up ones, maybe some of the ones that they're pricing to go under. But yeah, major reversal here of the oil price, and I have a feeling we may have put in a bottom in oil for the remainder of the year, unless there's complete carnage in global equity markets. Right, on the back of oil, let's look at Sasol, which obviously made this beautiful double bottom, looks like in hindsight here, and at around the 365 level. You can see very quickly already coming up to its 200-day moving average, and kind of almost breaking out of a little bit of this downtrend. So I think that that's a little bit irrelevant, that line that I just drew, and I really think that the major levels up here around 480. But if we get above the 200-day moving average, I think that's incredibly significant. The fact that we held as well as we did in Sasol relative to what a lot of the other global energy stocks are doing, I think is a major tribute to the diversification that they've managed to get in their business, outside of just oil, obviously in the chemicals businesses and that sort of thing that have held up so well. All right, let's look at Brate. Brate's had a huge V-bottom bounce here off of the lows. You can see that we spiked down to 120, where all of a sudden we are back up to 144, and very quickly right up toward this neckline of what there was that original head and shoulder pattern. So I think that this is the last real level of resistance. If we break through here, then it could be possible to see us trade up toward the previous highs. So I would look at 145 as being that actual number. Like I said, if we get through 145, we could see this thing really run a little bit. If we pull back off of 145 and kind of hang in there at 137, 138, then we could look like we're making an inverse head and shoulder as well. So keep an eye on that in the next week or two. Couple stocks still really beaten up and haven't really filled their gap is one, SA Breweries. So you can see here we had a nice little consolidation going on in SA Breweries for a long time. Couldn't get above that 690 level, and now you can see, I mean, we've really just consolidated down here on the breakdown. We haven't managed to regain any of this, even with the rand imploding well through the 20 level against the pound. We haven't been able to fill this gap, which is way up here at, sorry about that, way up here at around 620. So just have a look for that. I wouldn't be surprised if that was to happen in the next couple of days. I think if markets hold up, I think it will happen. The other is MTN. We still haven't gotten a gap fill in MTN. I really think that we need a gap fill to 182. I mean, 180 would be, intraday, but I think we got to gap fill to that close, which would be about 182. It also has been, continued to be heavy, even though it's been, it's ripped down so hard. You can see how just over a few sessions we dropped about 35, 40 bucks, and we've really only managed to regain about 10 or 12 of that. So I would expect that these stocks, if we do hold up over the next few sessions, may make a bit of a gap fill. If we don't, then obviously any of them can come.